Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong monthly demand and support area. In fact, from here, all this previous move to the upside was created. Again, here, the market tested its zone and rejected to the upside. Again, here, tested and rejected, and again here, and we can see how lately the market has once again tested this exact same level, started rejecting it to the upside, and from here we could expect more bullish continuation to be created away from this level. So the monthly time frames seems quite bullish. Now, dropping down on the weekly time frame, what do we have? Well, from a weekly standpoint, if we look closer, we can see how the market went from creating lower lows and lower highs to then having a horizontal accumulation phase, and now it is creating higher highs and higher lows. So essentially what happened here is that we had a perfect example of a shift from a bearish trend to a bullish trend. Now, in the bearish trend, you expect the creation of lower lows and lower highs, and then in the creation of an uptrend, you expect higher highs and higher lows. We can see, in fact, how we had the previous high and previous low here, then we had a new higher high and a new higher low here, then we had a new higher high here and higher low here, and now we also had the creation of a new higher high. So from a weekly perspective, everything seems quite bullish and we could expect more potential bullish continuation. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about GBPUSD quite a few times in the past. I spoke about it when the market was here and I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. Then after this impulse and correction from here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside. And then we had the creation of this M pattern here. And I made another breakdown explaining all the reasons for which we could expect this rejection to the upside. And in the very last analysis, when the market was here, I explained all the reasons for which we could expect the creation of this new daily higher high. And again, that is exactly what the market gave us. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, from a daily standpoint, what we can notice is that we just had a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, what we can notice here is that we have a 0.32 50% and 0.618 Fibonacci retracements levels that are lining up exactly with this previous daily resistance that was resistance here and again here, which has now turned support at this level after the market broke it to the upside, because what we know is that previous resistance, once it gets broken to the upside, becomes support. So what the market is actually testing here is previous daily resistance turned support in confluence with these Fibonacci levels. So essentially we have a confluence of support area inside of here, inside of which we could expect more institutional longing, which in turn would further increase the probabilities of a potential rejection to the upside away from this level. Now, why am I speaking about more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the pound, what we can see is that with the last reports, we went from having minus 27.7k net positions all the way up to having plus 19.9k net positions. So clearly, we went from a situation where we had a negative net positioning with more shorts than longs. We had, in fact, 80,500 shorts compared to only 52,700 longs, all the way up to now having a positive net positioning of plus 19.9k net positions with 68,800 longs compared to only 48,800 shorts. So institutions went from having more shorts than longs to now having more longs than shorts. So clearly they are very bullish on the GBP. And keep in mind that all currencies on the spot are traded against the USD. So if we're checking the data for the GBP, we are actually already checking GBP USD. So what we could expect here is to see more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So what I could expect in a situation like this? Well, in this case, if the market will shift from an intraday perspective back to the bullish side, and why do I say from an intraday perspective? Because always keep in mind that the monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations, it's always best to be looking at intraday time frames. So if the market from an intraday perspective would shift from an intraday bearish environment to a bullish environment at that point, what I could expect is more bullish continuation to be created away from this area, potentially completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.